Question 1. John is employed in a high-risk occupation as a construction worker and has purchased a long-term disability insurance policy. The policy defines total disability as the inability to perform the material duties of his own occupation. After sustaining an injury that prevents him from working in construction, John is offered a job as a project manager which he is physically able to perform. Based on the policy's definition of disability, what is the most likely outcome for John's claim? A. John will receive full disability benefits because he cannot perform his previous job. B. John will receive partial disability benefits because he can still work in another job. C. John will receive full disability benefits as long as he does not work in construction. D. John will not receive any disability benefits since he can perform the duties of a different job. Answer A. John will receive full disability benefits because he cannot perform his previous job. Explanation. Under many long-term disability policies, lone occupation disability coverage means the insured is considered totally disabled if they are unable to perform the specific duties of their own job. Even though John can perform a different job as a project manager, the fact that he is unable to work as a construction worker qualifies him for total disability benefits. The key distinction here is that his own occupation, rather than any occupation, is the threshold for determining disability benefits. This rule helps workers in high-risk occupations maintain their financial security if they can no longer perform their specialized tasks. Answer B. Disability due to an injury sustained while engaging in hazardous activities, unless covered by an optional rider. Explanation. Disability insurance policies often include exclusions for injuries or disabilities that arise from hazardous activities, such as participating in extreme sports or other high-risk activities, unless the policyholder has purchased a specific rider that covers these activities. Workers' compensation benefits, option C, would typically provide benefits for a workplace injury and pre-existing conditions. Option A may or may not be covered depending on the terms of the policy. Car accidents, option D, can be excluded depending on the circumstances and whether the injury occurred while commuting, but this is more likely to be covered if the accident happened during a work-related commute or as part of duties assigned by an employer. Question 3. Scenario question. Sarah has a disability insurance policy through her employer's group plan. She was recently diagnosed with a chronic illness that significantly affects her ability to work at full capacity. However, she continues working at a reduced schedule, and her condition may prevent her from returning to full-time work for an extended period. Based on her disability policy, what should Sarah do next to ensure she is eligible for benefits? A. Sarah should stop working entirely and file for full disability benefits immediately. B. Sarah should notify her employer and provide medical documentation for a claim review. C. Sarah should continue working at her reduced schedule until her condition worsens. D. Sarah should stop working and immediately apply for Social Security Disability Insurance (SD). Question 2. Which of the following is typically excluded from disability insurance coverage? A. Disability due to pre-existing medical conditions that were disclosed during underwriting. B. Disability due to an injury sustained while engaging in hazardous activities, unless covered by an optional rider. C. Disability from a workplace injury covered by workers' compensation. D. Disability resulting from a car accident while commuting to work. Answer B. Sarah should notify her employer and provide medical documentation for a claim review. Explanation. Sarah should notify her employer and provide appropriate medical documentation to start the disability claim process. Most disability policies, especially group policies, require documentation from healthcare providers to substantiate the claim. The policy may provide partial disability benefits based on Sarah's reduced capacity to work, and it is essential for her to follow the claims process for approval. Stopping work entirely, option A, is not necessarily required unless her condition meets the policy's definition of total disability. Option C suggests an action that delays the process and may lead to a denial of benefits if the condition worsens without proper documentation. Option D, applying for SSDI, is a separate process and does not immediately impact her disability insurance benefits unless required by the terms of the policy. Question 4. Which of the following best describes the impact of a waiver of premium rider in a disability insurance policy? A. The policyholder can waive premium payments if they experience a partial disability. B. The policyholder's premiums are waived if they become totally disabled, but the policy remains in force. C. The policyholder can cancel the policy without penalty if they become totally disabled. D. The policyholder's premiums are refunded if they are approved for disability benefits. Answer B. The policyholder's premiums are waived if they become totally disabled, but the policy remains in force. Explanation. A waiver of premium rider is a common feature in disability insurance policies that allows the policyholder to stop paying premiums if they become totally disabled. This ensures that the policy remains in force and the policyholder continues to receive coverage without the burden of paying premiums during their disability period. The key aspect of this rider is that it helps maintain the integrity of the insurance coverage while the policyholder is disabled but the premiums are waived. The other options are incorrect because they either misinterpret the rider's application or describe conditions not associated with the waiver of premium provision. Question 5. Which of the following is NOT typically considered when underwriting a disability insurance policy? A. The applicant's occupation and associated risks. B. The applicant's gender and marital status. C. The applicant's health history and medical records. D. The applicant's annual income and ability to pay premiums. Answer: B. The applicant's gender and marital status. Explanation: underwriting for disability insurance focuses on assessing the applicant's occupation, health history, and income to determine their insurability and premium rates. Occupation and associated risks, option A, are significant because they affect the likelihood of a disability occurring. The applicant's health history, option C, is also critical to assess the risk of pre-existing conditions or future disability. Annual income, option D, is relevant because higher incomes may result in higher premium amounts or different benefit calculations. Gender and marital status, option B, are typically not considered in underwriting for disability insurance as these factors are not directly related to the risk of becoming disabled. Question 6. Scenario question: David has been working as a lawyer for the past 15 years and recently suffered a debilitating back injury. He is unable to continue working as a lawyer but has found work as a legal consultant which allows him to work part-time. His disability insurance policy defines total disability as the inability to perform the duties of his own occupation. What should David do to ensure he receives his disability benefits? A. David should stop working as a legal consultant and claim total disability benefits. B. David should provide medical documentation and file a claim for disability benefits explaining his inability to work in his own occupation. C. David should continue working as a legal consultant and not file for disability benefits unless he can no longer perform the consulting work. D. David should appeal his insurance policy to include part-time work as a disability condition. Answer: B. David should provide medical documentation and file a claim for disability benefits explaining his inability to work in his own occupation. Explanation: since David's disability insurance policy defines total disability as the inability to perform the duties of his known occupation, he should file a claim for benefits supported by medical documentation stating that he is unable to continue working as a lawyer due to his back injury. While he has found a new part-time job as a legal consultant, it does not change the fact that he is unable to fulfill the duties of his previous occupation. Most policies that use loan occupation definitions will provide full benefits if the policyholder cannot perform the material and substantial duties of their regular profession, even if they take on a different, less demanding role. Question 7. What is the primary difference between short-term disability insurance and long-term disability insurance? A. Short-term disability insurance typically covers disabilities lasting up to 1 year, while long-term disability insurance covers disabilities lasting for longer periods. B. Short-term disability insurance provides income replacement for more severe disabilities than long-term disability insurance. C. Long-term disability insurance has lower premiums than short-term disability insurance. D. Short-term disability insurance applies only to employees in high-risk jobs, while long-term disability insurance applies to all employees. Answer: A. Short-term disability insurance typically covers disabilities lasting up to 1 year, while long-term disability insurance covers disabilities lasting for longer periods. Explanation: the primary difference between short-term and long-term disability insurance lies in the duration of coverage. Short-term disability insurance typically covers disabilities lasting from a few weeks up to 1 year, providing income replacement during that period. In contrast, long-term disability insurance is designed to cover disabilities that extend beyond the short-term period, often paying benefits for several years or even until retirement age. The other options are incorrect because the severity of the disability does not generally determine the type of insurance. Option B, premiums for long-term disability are typically higher than for short-term. Option C, and both types of insurance are available to employees regardless of the risk level of their job. Option D. Question 8. Which of the following is a common exclusion in a disability insurance policy? A. Disabilities caused by accidents that occur while the policyholder is on vacation. B. Disabilities resulting from injuries caused by acts of war or terrorism. C. Disabilities from injuries sustained while commuting to work. D. Disabilities arising from routine, non-emergency medical treatments. Answer: B. Disabilities resulting from injuries caused by acts of war or terrorism. Explanation: most disability insurance policies include exclusions for disabilities resulting from injuries caused by acts of war or terrorism. These events are typically considered high-risk scenarios that insurers do not cover. The other options are generally covered by disability insurance policies, although specifics may vary. Disabilities caused by accidents while on vacation, option A, or injuries from commuting to work, option C, are typically covered provided they are not excluded by specific policy terms. Disabilities from routine, non-emergency medical treatments, option D, are also typically covered unless the disability arises from a pre-existing condition or other specific exclusions in the policy. Question 9. What type of disability insurance rider would provide an increase in benefits to keep pace with inflation? A. Residual disability rider. B. Cost of living adjustment COLA rider. C. Waiver of premium rider. D. Own occupation rider. Answer: B. Cost of living adjustment COLA rider. Explanation: a cost of living adjustment COLA rider allows for increases in disability insurance benefits to keep pace with inflation. This rider helps maintain the purchasing power of the benefits over time. Residual disability riders, option A, provide benefits to those who are partially disabled and unable to work full-time, while a waiver of premium rider, option C, waives premium payments during a period of disability. The own occupation rider, option D, defines disability based on the inability to perform the duties of one's own occupation, but it does not address inflation or benefit increases. Question 10. Scenario question: Michelle works as a freelance graphic designer and has an individual disability insurance policy that covers her for total disability. She recently developed severe carpal tunnel syndrome, which has significantly impacted her ability to work. A doctor recommends she stop using a computer for several months to recover, but Michelle can still take on limited graphic design work using alternative methods. How should Michelle proceed to ensure she qualifies for disability benefits? State: Michelle should continue working until she is no longer able to perform any work at all. B. Michelle should stop working completely and file a claim for total disability benefits. C. Michelle should reduce her workload and file for partial disability benefits. D. Michelle should apply for long-term disability insurance benefits. Answer: C. Michelle should reduce her workload and file for partial disability benefits. Explanation: since Michelle's policy covers her for total disability, she should evaluate whether she qualifies for partial disability benefits based on her condition. Partial disability benefits are typically available when the insured can still work, but at a reduced capacity, such as in Michelle's case. While stopping work completely is not necessary, Michelle should notify her insurer of the situation and provide medical documentation showing her reduced ability to work. The policy may provide benefits based on the reduction in income or working hours caused by her condition. Therefore, filing for partial disability benefits, option C, is the most appropriate course of action. Question 11. Which of the following is a characteristic of group disability insurance policies compared to individual disability insurance policies? A. Group disability policies typically have higher premiums than individual policies. B. Group disability policies are underwritten based on the individual health of each employee. C. Group disability policies often provide lower coverage amounts than individual policies. D. Group disability policies allow employees to purchase additional coverage beyond the group policy. Answer: C. Group disability policies often provide lower coverage amounts than individual policies. Explanation: group disability insurance policies typically provide lower coverage amounts compared to individual policies because the premiums are usually more affordable and the coverage is spread across many policyholders. The premiums for group policies are typically lower than individual policies, option A, and group policies are generally not underwritten on an individual basis, meaning the health of employees is not individually assessed, option B. While some group policies may allow employees to purchase additional coverage, it is not always the case, option D. Question 12. Which of the following is generally true about the elimination period in disability insurance? A. The elimination period is the maximum time the insurer will pay benefits to the policyholder. B. The elimination period is the waiting period that must pass before benefits are paid after a disability occurs. C. The elimination period is the period during which the policyholder must be employed to qualify for benefits. D. The elimination period applies only to short-term disability insurance policies. Answer B. The elimination period is the waiting period that must pass before benefits are paid after disability occurs. Explanation: the elimination period is a waiting period that must be met before disability benefits are paid. It is similar to a deductible in health insurance, but instead of a monetary amount, it is measured in time. Once the elimination period is over, the policyholder can begin receiving benefits. The elimination period does not refer to the maximum benefits paid, option A, or employment requirements, option C, nor is it limited to short-term disability policies, option D. Question 13. Scenario question: Kathy has been diagnosed with a chronic illness that makes it difficult for her to work full-time. She is still able to work part-time but has a substantial loss of income. She wants to know whether her disability insurance will provide any benefits. What would be the best advice to give Kathy? A. Kathy should file a claim for partial disability benefits as her loss of income qualifies her for benefits. B. Kathy is not eligible for any disability benefits since she is still working part-time. C. Kathy should only file for benefits if she is unable to work at all. D. Kathy can only claim disability benefits if she is unable to work in her previous occupation. Answer A. Kathy should file a claim for partial disability benefits as her loss of income qualifies her for benefits. Explanation: partial disability benefits are typically available if a policyholder is able to work part-time or at a reduced capacity due to illness or injury, but suffers a loss of income. Kathy qualifies for these benefits based on her reduced earning capacity, so she should file for partial disability benefits. The other options are incorrect because disability benefits can be paid in situations where the individual is still able to work as long as there is a significant loss of income. Question 14. Which of the following is not a typical feature of disability insurance policies? A. Coverage for both total and partial disability. B. A rider that increases benefits in line with inflation. C. Coverage for disabilities related to pre-existing conditions. D. A grace period for paying premiums during a period of disability. Answer C. Coverage for disabilities related to pre-existing conditions. Explanation: disability insurance policies typically exclude coverage for disabilities related to pre-existing conditions, meaning the policy will not pay benefits for disabilities that result from a condition that existed before the policy was purchased. Most policies do not cover pre-existing conditions, option C. The other options are typically part of standard disability insurance policies. Coverage for both total and partial disability, option A. A rider for cost of living adjustments, option B. And a grace period for premium payments during disability, option D. Question 15. What does the lone occupation definition of disability in a disability insurance policy refer to? A. The policyholder cannot perform any work, regardless of the type of work. B. The policyholder cannot perform the duties of their specific occupation, even if they can perform other types of work. C. The policyholder cannot perform any work related to their field, even if they can do other work. D. The policyholder must be totally unable to perform any work for a minimum of 6 months. Answer B. The policyholder cannot perform the duties of their specific occupation, even if they can perform other types of work. Explanation: the lone occupation definition of disability is more favorable to the insured because it covers situations where the policyholder is unable to perform the duties of their specific occupation, even if they can work in another role. This is typically used in high-skilled professions where the insured may be unable to perform their usual job but could still do other types of work. The other options are incorrect because they either misinterpret the nature of the lone occupation definition or are not related to this specific type of policy. Question 16. Which of the following is an advantage of purchasing an individual disability insurance policy over group disability insurance policy? A. Individual policies tend to have lower premiums than group policies. B. Individual policies offer more flexible coverage options and are tailored to the policyholder's needs. C. Individual policies are easier to obtain because they are not underwritten. D. Individual policies typically provide higher coverage amounts than group policies. Answer B. Individual policies offer more flexible coverage options and are tailored to the policyholder's needs. Explanation: Individual disability insurance policies are often more customizable than group policies, allowing the policyholder to select coverage options that best suit their needs. This includes adjusting the elimination period, benefit amount, and the duration of coverage. Individual policies are generally more expensive than group policies, option A, and they are underwritten based on the individual's health and risk factors, option C, while individual policies can provide higher coverage amounts, option D. The most significant advantage is their flexibility and customization. Question 17. What is the purpose of an accident rider in a disability insurance policy? A. To cover only injuries caused by accidents, excluding illnesses. B. To waive premiums for policyholders who are injured in an accident. C. To provide additional benefits for injuries that result from accidents. D. To exclude coverage for injuries sustained while commuting to work. Answer. C. To provide additional benefits for injuries that result from accidents. Explanation. An accident rider typically provides additional benefits if the disability results from an accident. This rider may increase the amount of benefits paid or offer other perks for accident-related disabilities. It does not exclude coverage for injuries from illness, option A, waive premiums, option B, or apply specifically to commuting, option D. The main function is to enhance the coverage when the disability is caused by an accident. Question 18. Which of the following best describes the residual disability rider in a disability insurance policy? A. It provides benefits if the policyholder can no longer perform any duties in their occupation. B. It pays benefits when the policyholder experiences a partial loss of income due to disability. C. It only applies if the policyholder is completely disabled and unable to work at all. D. It pays benefits for disabilities resulting from pre-existing conditions. Answer. B. It pays benefits when the policyholder experiences a partial loss of income due to disability. Explanation. The residual disability rider provides benefits when the policyholder experiences a partial disability that results in a reduction of income. This rider is beneficial for individuals who can still perform some of their job duties but experience a loss of income due to their disability. It is not limited to total disabilities, option A or C, and it typically does not apply to pre-existing conditions, option D. Question 19. Scenario question. Tom works as a carpenter and is injured while working on a construction site. He is unable to perform his duties for 2 months but can still work part-time in a different role that does not require manual labor. He has a disability insurance policy that offers partial disability benefits. How should Tom proceed? A. Tom should continue working part-time and not file for disability benefits. B. Tom should file a claim for total disability benefits as he cannot perform his usual job. C. Tom should file a claim for partial disability benefits as his ability to work has been reduced. D. Tom should apply for workers' compensation instead of disability insurance. Answer. C. Tom should file a claim for partial disability benefits as his ability to work has been reduced. Explanation. Since Tom is still able to work part-time but cannot perform his regular duties as a carpenter, he should file for partial disability benefits. These benefits provide compensation when a policyholder can still work but at a reduced capacity, leading to a loss of income. The other options are incorrect because he is not totally disabled and workers' compensation may also apply, but it typically covers workplace injuries and may be separate from his disability insurance. Question 20. Which of the following is true about the waiting period for disability insurance? A. The waiting period determines how long the policyholder must wait before filing a claim. B. The waiting period is the time after a claim is filed before benefits are paid. C. The waiting period is a set amount of time during which the policyholder is not allowed to work. D. The waiting period applies only to policies with unknown occupation definitions of disability. Answer. B. The waiting period is the time after a claim is filed before benefits are paid. Explanation. The waiting period or elimination period is the amount of time that must pass after the onset of a disability before benefits begin to be paid. This period ensures that short-term conditions are not covered and that only long-term disabilities result in benefits. It does not dictate when a claim can be filed, option A, nor is it tied to the ability to work, option C, or specific disability definitions, option D. Question 21. Which of the following would likely not be covered under a typical disability insurance policy? A. Disability resulting from a car accident. B. Disability resulting from a pre-existing medical condition. C. Disability resulting from a workplace injury. D. Disability resulting from a mental health condition. Answer: B. Disability resulting from a pre-existing medical condition. Explanation: most disability insurance policies have exclusions for disabilities that result from pre-existing conditions. These are typically conditions the insured had before purchasing the policy. The other options, A, C, and D, are typically covered, though specific terms can vary depending on the policy. Question 22. Which of the following best describes presumptive disability, disability insurance policy? A. A policyholder is presumed to be disabled if they cannot work in any occupation. B. A policyholder is presumed to be disabled if they suffer the total loss of sight, hearing, or the use of limbs. C. A policyholder is presumed to be disabled only after 6 months of inability to work. D. A policyholder is presumed to be disabled if they have a disability due to an accident at work. Answer: B. A policyholder is presumed to be disabled if they suffer the total loss of sight, hearing, or the use of limbs. Explanation: presumptive disability refers to specific conditions where the policyholder is considered disabled by default. For example, total loss of sight, hearing, or the use of limbs often qualifies as presumptive disability, meaning the insured does not need to meet additional criteria to prove disability. The other options do not accurately reflect presumptive disability criteria. Question 23. Which of the following is typically true regarding short-term disability insurance? A. Short-term disability insurance typically has a longer elimination period than long-term disability insurance. B. Short-term disability insurance provides coverage for a few weeks to several months. C. Short-term disability insurance covers disabilities that are expected to last for more than a year. D. Short-term disability insurance pays a larger portion of the policyholder's salary than long-term disability insurance. Answer: B. Short-term disability insurance provides coverage for a few weeks to several months. Explanation: short-term disability insurance provides benefits for a temporary period, typically a few weeks to several months. It is designed to cover short-term illnesses or injuries. Long-term disability insurance, on the other hand, covers more serious disabilities that can last for years. The other options are incorrect because short-term disability policies generally have shorter elimination periods, and they don't cover disabilities expected to last for a year or longer. See question 24. Which of the following is a potential disadvantage of choosing a long elimination period in a disability insurance policy? A. The policyholder may face a delay in receiving benefits after the disability occurs. B. The monthly premiums for the policy will increase significantly. C. The policyholder may lose coverage for short-term disabilities. D. The elimination period will be longer than the total duration of the disability. Answer: A. The policyholder may face a delay in receiving benefits after the disability occurs. Explanation: a long elimination period means the policyholder must wait a longer time before benefits begin. While this can result in lower premiums, option B, the primary downside is the delay in receiving financial assistance during the waiting period. The other options are incorrect because a longer elimination period does not affect the coverage for short-term disabilities. C. And does not typically exceed the duration of the disability. D. Question 25. Scenario question: Sarah has purchased an individual disability insurance policy. After she becomes disabled, she learns that her policy includes a true own occupation definition of disability. Which of the following would best describe the impact of this definition on her ability to claim benefits? A. Sarah would be eligible for benefits only if she cannot work in any occupation. B. Sarah would be eligible for benefits if she cannot work in her current occupation, even if she could perform other types of work. C. Sarah would be eligible for benefits only if she cannot perform the activities of daily living. D. Sarah would be ineligible for benefits unless she is totally unable to perform her occupation in any capacity. Answer: B. Sarah would be eligible for benefits if she cannot work in her current occupation, even if she could perform other types of work. Explanation: a true own occupation definition means that the insured is eligible for disability benefits if they cannot perform the duties of their specific occupation, even if they are still able to work in other types of jobs. This definition is more favorable to the policyholder compared to other definitions, such as any occupation policies. Question 26. Which of the following is true about the cost of living adjustment COLA rider in a disability insurance policy? A. The COLA rider automatically adjusts the benefits in line with the Consumer Price Index (CPI). B. The COLA rider increases the monthly premium every year. C. The COLA rider increases the policyholder's benefits to offset inflation. D. The COLA rider is only available in short-term disability policies. Answer C. The COLA rider increases the policyholder's benefits to offset inflation. Explanation. The COLA rider increases the policyholder's benefits over time to help keep up with inflation. This ensures that the purchasing power of the benefits remains strong. The rider does not automatically adjust the benefits according to the CPI, nor does it directly increase premiums. B. The COLA rider can apply to both short-term and long-term policies. D. Though it's more commonly found in long-term policies. Question 27. Which of the following is NOT typically covered under a disability insurance policy? A. Illness is the result of natural causes. B. Disabilities caused by injuries sustained in a car accident. C. Disabilities related to substance abuse. D. Disabilities caused by an act of war. Answer. D. Disabilities caused by an act of war. Explanation. Most disability insurance policies exclude disabilities resulting from acts of war, terrorism, or civil unrest. Other disabilities, such as those caused by illness, the car accidents, B, and even substance abuse, C, may be covered, though coverage can vary depending on the policy and specific exclusions. Question 28. What is the primary advantage of a waiting period in each disability insurance policy? A. It allows the policyholder to receive benefits faster. B. It helps reduce the premium cost by limiting the insurer's payout risk. C. It allows the insurer to conduct a more thorough investigation of the claim. D. It ensures the policyholder remains disabled for a longer period before receiving benefits. Answer. B. It helps reduce the premium cost by limiting the insurer's payout risk. Explanation. The waiting period reduces the risk to the insurer by delaying when benefits are paid, allowing the insurer to reduce premiums. While the other options may seem relevant, the primary purpose of the waiting period is cost management for both the insurer and the policyholder. Question 29. What is a partial disability benefit typically based on in a disability insurance policy? A percentage of the insured's lost income due to partial disability. B. The total income the insured would have earned had they been able to work full-time. C. The difference between the insured's regular salary and their current earnings. D. A flat benefit amount regardless of income loss. Answer A. A percentage of the insured's lost income due to partial disability. Explanation. Partial disability benefits are typically based on the percentage of income the insured has lost due to their disability. These benefits are designed to compensate for the reduction in earnings when the insured can still work, but at a lower capacity. The other options are incorrect because partial disability benefits are not typically calculated as flat amounts, D, or the difference between full and current earnings, C, unless specifically stated in the policy. Question 30. Which of the following is often a limitation in disability insurance policies regarding mental health conditions? A. Mental health conditions are covered only if the disability results in physical injury. B. Mental health conditions may be subject to a limited benefit period or waiting period. C. Mental health conditions are always covered without exclusions. D. Mental health conditions are only covered in conjunction with physical injuries. Answer. B. Mental health conditions may be subject to a limited benefit period or waiting period. Explanation. Mental health conditions in disability insurance policies are often subject to limitations such as a shorter benefit period or a longer waiting period before benefits are paid. This is because mental health-related disabilities may be more challenging to assess and manage, while mental health conditions may not be completely excluded. C. They typically face specific restrictions under many policies.